Hello and welcome to Indicator series of Forex Monopoly. In this video, I will tell you everything you need to know about RSI. I will break down each and every important factors which you should consider before using RSI in your trading. So let us start by understanding what is RSI. The Relative Strength Index is a momentum oscillator indicator which calculates the strength of the price changes happening in the market to show overbought and oversold conditions. In simple words, if you are using RSI with 14 period, it will examine 14 candles to create a reading on the time frame which you are using and will show this between two extreme levels. So RSI is shown as the line between two extreme levels, and this level are called as overbought level and the oversold level. And these levels can be set anywhere between 0 to 100. To add RSI to your trading view chart, just go to the indicator section and then search for RSI or Relative Strength Index and then click on it. So this is the RSI indicator, and these two lines over here are the two extreme levels. This is the overbought level and this line is the oversold level. The settings of the RSI can be changed according to our needs. Like when we go to the settings of the RSI, in the input section you will see the length and the source. The length means the period which you are using. Like if you keep the length to 14 like we have in our chart, it will examine the last 14 candles to create a reading. And if you keep the length to 10, then it will examine the last 10 candles to show you a reading. The lower the length, the more sensitive the indicator will get to the price. And you will see that the price will very quickly go from overbought to oversold and vice versa. For example, let us keep the length or the period of the RSI to 4. So as we kept the period or the length to 4, you can see that the indicator has become very sensitive to the price movement. So what I mean is, it is very quickly giving us overbought and oversold signals. So by using a lower period, you can get many setups, but it becomes very less reliable and gives too many false signals. Like if you can see at this point, the RSI is showing that the price is oversold, but the price still keeps on moving down. So that's the problem when you lower the period of the RSI. You will get too many false signals. On the other hand, when we increase the period, so let us keep the period of the RSI to 20. So when we increase the period of the RSI, the indicator will become very less sensitive to the price movement and we will get less setups but more reliable ones. So many traders use different period for RSI as per their use. Like day traders may use a low period to get more setups, and the swing traders may use high periods. But I will recommend you to use 14 period in the RSI as it is the most reliable one and will give you enough setups. Now talking about the source tells us that the value of RSI is based on what? Like if you choose open, then the value of the RSI will be based on the open of the candle or the opening of the candle. And if you choose high, the value will be based on the previous high of the candle and so on. And in the style section, you can change the color according to your need and also the levels of the overbought and oversold level. The upper band is nothing but the overbought level and the lower band is nothing but the oversold level. You can keep the value of these two levels anywhere between 0 to 100. And the extremes the values are, the better signal you will get. Normally the custom levels of 70 and 30 are very quite accurate, so you can use them too. Now what does an RSI tells you? Basically the RSI is meant to follow the price action. So when the RSI line approaches the overbought level, that is level 70, it tells that the market is overbought and sellers can enter the market. And when the RSI approaches the level 30, that is the oversold level, it tells that the market is oversold and buyers can now enter the market. For example, here you can see as the price or the RSI line moved to the overbought level, sellers came in and they pushed the price to the downward direction. And when the same thing happened, that is the RSI moved to the oversold level, buyers came in and they pushed the price higher.